Hi team. In this video, I want to explore the working capital adjustment process. Let's explore precisely how the working capital adjustment takes place. In a financial model, everything is just automatic. But in a real-world scenario, humans unfortunately have to communicate. So let's explore how this works. The first step is to establish a target working capital. It's common to have the seller deliver an estimate of working capital leading up to the closing to arrive at a better approximation of working capital prior to making the post-closing adjustment. So this is what the buyer and seller agree is the best estimate of working capital on the date of the transaction, which is of course in the future. So it's highly unlikely to be very accurate. And that's precisely why you need a working capital adjustment in the first place. Next, the transaction has to close, of course. And on the closing date of the transaction, the buyer will pay the sellers an initial purchase price, which is subject to an adjustment for working capital. Now, as one way to make sure the working capital adjustment is paid, a portion of the initial purchase price will go into what is known as a working capital escrow account. So this money's tied up and held by a third party, and it cannot be released until both parties agree to the calculation. And as a quick aside, this is not typically the only adjustment made to purchase price. Additional adjustments can be included, but here we will focus solely on the working capital adjustment. And just to echo, the initial purchase price includes an estimate of working capital for the closing date, the target working capital. This is the variable we will be adjusting for. So where are we now? The transaction is closed, and now the buyer gets to respond by stating what the final working capital on the date that the buyer assumed control was for the business. The buyer is now in control of the company, so it makes sense that they would be following up with this calculation. But this can't take place immediately because it takes time to close the books. So the buyer will have somewhere between 60 and 120 days after the closing date to deliver a closing statement, which details the buyer's calculation of working capital. So to be clear, this is the final working capital. Now, the seller isn't just going to sign off on it, or at least they shouldn't. They're entitled to a review period. With the closing statement in hand, the seller will have, call it 30 days. Could be more, could be less, to review the closing statement. If the seller doesn't agree with the closing statement, then the seller has to make the buyer aware of this disagreement in writing with reasonable detail prior to the expiration of the review period. If they agree, they will then sign the working capital calculation agreement, a short letter, which if you're looking for dry reading material, looks like this, and states that both parties agree and that the funds held in escrow for this purpose can be released, which brings the process to its conclusion. Now, just to make sure this sticks, let's revisit what just happened with the post-closing adjustment. Both parties have agreed that the calculation is accurate, so the adjustment is made as follows. If the final working capital is greater than the target working capital, which is known as the excess amount, then the buyer pays the sellers an amount equal to the difference. On the other hand, if the final working capital is less than the target working capital, the shortfall amount, then the escrow agent releases an amount equal to this difference from the working capital escrow account to the buyer. Now, if the working capital calculation is accurate, then this isn't a win or lose situation. To take the second point as an example, assume the company had too little inventory on the balance sheet when the company transferred hands. This would mean that the buyer would have to go out and purchase that inventory to continue to run the business. But fortunately, the funds released from the working capital escrow account make the buyer whole for this purchase. All right, team, that's all for now. Thanks for watching.